welcome everyone to the Industrial Committee. We are really excited to be with you today. Got Frankie here and myself, and we are extremely eager to jump into this, Q&A flow session with Danny Brickey. Danny, I don't know if you are here, if you can hear us, but I want you to give a quick
Hello, can you hear me?
background.
Yeah.
Do what?
Yeah, no, I'm here.
Perfect, perfect. So
Fantastic.
just to kind of iterate, this committee is dedicated to bringing brokers together, investors, industry leaders to share national trends, best practices in the world of industrial real estate, right? And today we're specifically going to be focusing on adaptive reuse, and we thought it would be very beneficial to have just an entire session dedicated towards this niche of industrial. So we want to introduce Danny Brickey onto the committee here to give just a quick background on who you are. I would love for you to just share your overview, your story, and then we'll jump into some questions and I want to kind of build off of it from there.
Yeah. So yeah, just in short, Danny Brickey, commercial DMB for the state of Arkansas. And then I kind of got my feet wet and my jump into this a little over a decade ago, 2013 going into 2014. Had a friend who's still my friend and partner. Kind of coaxed me into it, just like, and I don't know how most people got their start in real estate. Got it on the side. He had a property management company, so I just got my license. I was in the corporate world at that time, doing like in and outside sales, branch management, or operational management things. That I was just kind of bored with that. Was looking to do something different. Got my license, started dabbling a bit in just like, and I'm assuming while we're all at eXp, just like any other self-motivated person, if you're good at something, you're good at something, right? You're putting your time and effort into it. Next thing you know, opportunities start providing themselves. So he convinced me at that point in time, to take what 401k I had, and we rolled it over into a self-directed IRA. And at that point in time, went in and started buying up old buildings within the downtown Little Rock corridor. So I went straight, almost putting my money where my mouth was, adaptive reuse, like right from the get go. Right, there was these, old buildings you could get them pennies on the dollar. And my partner Jordan, and actually my partner Jordan Haas is the DMB for the state of Alaska, right? So he's here with the eXp with us now as well. I brought him over after I moved over in 2021. So just to keep tracking there, we kind of, not kind of, we bought up two or three old buildings downtown Little Rock, and started repurposing them for either mixed use, retail, some, living. Office space was still decent at that time. So we just started converting, like one is a old department store that we converted in, is now like a litigation office. There's a gym in it. There's some additional kind of ancillary stuff in it, and then there's still some empty space in it that is yet to be developed. Um, and we had just a set of buildings, and then just through that process, and our property management company, we were looking at another two buildings that were on the same block that we thought was going to tie out and be a decent multifamily, it could be a decent multifamily project. But the rent rates in downtown Little Rock just weren't at the level that they needed to be to make sense from an investment standpoint to really entice any other major equity partners, right? I mean, I had my money invested in this, and then you get it rolling and use it up on those first few projects, and you kind of find a ways and means of working and doing these projects. But then you've got to go out and start raising some capital outside of yourself, right? So we really started in 2015, 2016, on kind of that tranche of business and trying to figure out what we could potentially do. Because with adaptive reuse, as we talk through this, it's like, what's the highest and best use? It's like you've got an old shell of a building, in an area or a downtown corridor or wherever it's at. But what could it potentially be? Like, what is the highest and best use for it? You come in, you do some, market analysis, see what maybe the local area doesn't have that's an amenity or something that it may need. And then during that time in that process, as we were evaluating it, we had a capital partner of ours introduce us to a guy that's now my partner by the name of Kanal Modi, who's a second generation hotelier here out of Arkansas. His family had always owned and operated, done hotels here within the state. And he had the idea of turning one of these old buildings into a full service hotel. But he didn't know anything. Like, we had become versed with the historic tax credit process by this time, as we had utilized it on a few of our other projects. So he didn't know anything about that. So we formed a partnership there. He had, the lucky point on that is he had a little bit more access to capital than we did at that point in time, and then we were able to come in, do a design build and build an AC Marriott here. Took what was a kind of two-part, the Hall and Davidson building, which was a just a old out of use. I mean, I think it had been shut down since the mid 90s, office building, and then completely redid it into an AC Marriott that's here in downtown, full service right now. So after that, and it's one of these things with adaptive reuse is, there's only so many buildings, there's only so many old buildings, and especially a mid-major town like Little Rock is. Little Rock's not a huge town. Our populace, even for the greater Little Rock metro, is only 500,000 people. So we kind of took that footprint and said, hey, we think we have something here. What could we do in other markets, right? So we went out and started searching some other markets. It led us to do a project up in St. Louis. And we have we have three projects in Texas right now that are in some phase of either construction, pre-construction, or we have a project in San Antonio that we're trying to close the construction loan and get under construction with it. We have a project in Fort Worth that is under construction, that should be finished here before the end of the year. All with the same idea of buying up old buildings with the specific use of doing them as hospitality products. So that's where, over the past few years, and then even, COVID was a wham for everybody, especially in the hospitality industry. It was difficult, but we were able to develop through that. There were some ins and outs there, that ended up adding some dollars, some additional costs, because basically just ended up carrying the projects through COVID. As investor money kind of dried up during that time, because no one knew what was going to happen at that time in the world, right? But post that, things have, started to bounce back. People are traveling again. Hospitality's picked back up nationwide. The only thing that we're facing now is that the bump in interest rates, from any development standpoint, especially on the adaptive reuse end, has kind of made construction cost, uh, especially on the loans on construction costs, it's starting to reach a barrier where it's becoming a little bit more difficult than it was, especially 2 years ago, to do some of these, with the kind of rise in interest rates. But like anything else, you kind of find a way to develop and work through it, and keep kind of plugging along. So hope that wasn't too long winded, but in a nutshell, that's just kind of on the development end of things. Besides brokering for EXP, we kind of threw our hat in doing that full time. Which, if anyone's ever done, real estate development, it tends to be more of a money draw than producing money in my bottom. So, like, we ended up shutting the property management company down so that we could focus on that. And then at that time, is actually when I took the chance and the opportunity to move over to EXP and continue just doing locally, commercial real estate, and working here as a commercial real estate practitioner in the state of Arkansas. So it's kind of, two hats that I wear. I've got all my personal money and everything that I have tied up in these larger development deals. Looking to hopefully within the next, 10 years be 50 and have passive income where I don't necessarily worry about anything anymore. Fingers crossed that we get there. And then besides that, that the day-to-day operations of being, a broker here for EXP.
I love it. I love it. And just to touch on that too, right? And the whole idea
Hey,
here.
real quick, sorry, I don't mean to cut you off, but hey, Danny, is there any way you can put your video on or put a profile
Yeah,
picture at least?
that's
Just,
yeah, that's
just a
and
great
that's what
screen.
I was playing with that previous to this, and I don't know why it is. If you give me a second, I may have to bounce out and bounce back in for it to pick up. I think, because I've looked through the settings and it's not necessarily letting me. I've played with the
Go on
settings here
your
for a minute.
go
And
click on the three dots right up by your screen and scroll all the way down. You can go to edit profile picture. That's what I just did, and I renamed myself. Maybe if not, it's just because we're recording it and it just looks weird with.
Yeah, no, fair enough. When
it's
I saw you recorded it, I've been playing with it there for a minute to try to get something up there for you.
it's all
It's a
we can.
good
It's not a
call,
huge deal.
Frankie.
We can scratch it or take a second and try to fix it, but
Good call.
no worries either way.
If you, yeah, Danny, if you want,
I'll
you want
just lip the words when you
No,
say
no, man, I would like to get
voice
my
right here.
profile up. I mean, I took the time and shaved and everything today, right?
Well,
So
let's
like
do it.
it's
Let's see what's your video.
now.
Bottom left says video, stop video, start video.
So,
There's a little arrow.
yeah, I mean, no, there's a little arrow, and that's what I'm saying. The video is completely grayed out. Choose background video settings.
I do
Uh,
this. Do you have your laptop cover thing on that does that? Like the privacy thing
um, maybe potentially general.
covering your webcam?
No, nothing's
Oh,
covering the webcam, so
huh.
interesting.
yeah, and that's what I'm
So
saying.
it sounds like he needs to log out and log back in.
Yeah, I think a lot of times whenever I'm logging in, especially because on the Zoom account that I have, it's keyed into the eXp Commercial Academy from time to time as well because I have to go in there and teach. So I did it straight from the browser, and I think the issue is that there's settings that I have to like let it do my computer. So just give me 1 second. Let me log out, log back in, and we'll go from there.
All right,
Perfect.
sounds good. No worries.
Yeah, and guys, this again, one of the questions that I do want to ask Danny about is, what are the key factors that he's looking at when he's evaluating these types of properties for adaptive reuse? And the reason being is, the goal here is for us to collaborate, to help each other out, to grow. And Danny is a playmaker in this space, and this may be something that somebody wants to potentially prospect on, or just keep an eye out for potential deals. And if they know, if you know what these guys are looking for, you can ask more intelligent questions on the other line and dig for more information to be able to put together these one pagers to present deals to people like Danny. And I really want to get his thoughts on that, because that's something that I don't know if you guys do a lot of prospecting, but over here we're really starting to kind of amp that up. Referral business is great, and there's people I know that have never made a cold call in their life, but it is still a big part of the business is finding these deals, picking up rocks, turning them over, and seeing what's underneath. And the more that we understand these different niches, right, and what these guys are looking for, the better brokers that we can be, right, and the better value we can provide on these types of scenarios. So yeah, I'm really looking forward to digging into the details here. And again, anyone, if you have any questions at any point that you want to ask Danny, please, raise your hand, jump in, chime in, interrupt. I want you guys to dig and really extract as much information as you'd like out of this.
I had a question.
Yeah.
Hi, Danny. So I was just curious to know, if you're looking to convert these adaptive reuse industrial uh, places into like, multifamily or mixed use, how easy or difficult is it to, get a variance, when it comes to rezoning it? What are the procedures or, is it a feasibility?
Yes, great question. As soon as Danny hops back in here, let's
All right.
ask him that question, because that's a fantastic question. Before he's connecting, there we go. Yes, Danny, we see you now.
Got it. All right, right on. There we go.
Perfect.
I don't even
Thank
like
you
that
so much.
background.
So if is Nigel? Nigel?
Nigel.
Nigel
Yeah.
had a question. I would like for you to ask that again now that Danny's on here before we move further. So go for it.
Hi, Danny. So I was just, looking to see what's the feasibility when it comes to, if you're looking to convert, like you mentioned, an industrial building into like a mixed use or, multifamily commercial. How about, the variance in zoning? Is that, something that's county dependent or, how long does that process take maybe to get those permits?
It depends, and what I will say is these projects are large, right? So we do have, we lean a lot of times on our contractors because we'll usually go in. The architect that we use is the same firm that we've used several times because they have a um, they have a history of doing several adaptive reuse projects, especially when you're crossing them with the historics, because there's a whole application process for that. That there's guidelines and everything else that you want to make sure that's being met. But a lot of times, what we do is if we're looking at a potential site, before we close on the building or anything else, typically we'll go to the city. An example is going to be the project that we have that's under construction in Fort Worth right now. We went to the city, went to, a lot of larger cities, depending on where you're at, may have some sort of economic development corp or some sort of offshoot of the city, that is going to be a good first stop shop to say, hey, we're looking at purchasing this building. If we purchase this, what, from the incentive standpoint, how can the city help us? B, it's an adaptive reuse project, so we know immediately that there's probably going to be some coding and some zoning issues. Can we take a look at that? And then also, if you're dealing with a local contractor, they should be looking at your permits and everything else right off the get-go, and advising what would be, if there's any pitfalls or issues, what those may be, so that you can start working with the city to get any sort of waivers or variances that you may need to do your job. Typically, it's usually the city that we don't have much problems or many problems with, because cities, they want development in their downtown corridors. They want a hospitality project. They're going to get those taxes. They want those people coming in and doing things. It's more or less the issues that we run into when you talk about compliance and zoning and having to change things, is we've run into power companies are the pain in the ass to deal with, because in most major metropolitan areas, whether it's Entergy here in Arkansas, or I think for Fort Worth, it's I can't remember the name of the company. Either way, um, they're almost monopolies where they are. So they're gonna come in, they're gonna do their assessment, especially if power's been taken off the grid because the building's been out of service for, or what you're doing, even if you're coming in and you're layering in pace and you're putting in, high efficiency stuff, and you're design building it the way that you need to for just longevity. They're going to say, oh, well, you need to add another transformer into the sub vault, and that's going to be $1 million to your bottom line, because they don't. It's not like they come in and do that infrastructure; they expect you to do it. So that's where, and then okay, well, this area or this vault that the current transformer sits in, you've got to put a larger one in now, and there's not enough room for it, right? So now where do we have to move or put this within a building? So when you get to an adaptive reuse project, there's going to be a lot of there's a lot of sessions where it's your architect, it's whatever power or utility services may be there, along with your construction company, maybe even your design team a little bit, um, that are sitting in a lot of VE sessions, right? Value engineering sessions, where we're going and talking through, okay, what's the highest and best use for these things? What's the best, AC units or mechanicals that we can get out there that fit within our space? What is that cost to us? Is there anything that's better? Because just like any other developer, you want to put in what's going to be functional, that's going to get you what you need, but at the same time, between code, zoning, and those other things, like there may be requirements that either brand standard has, there's going to be requirements that the city may have, and a lot of times it's the power company that's driving that a lot of that conversation.
Thanks a lot, Danny. Yeah, that was a pretty detailed response.
Yeah. So I mean, it's a lot, right? Like we're talking about. I mean, our Fort Worth project is $100 million project, right? There's a lot of pre-work. We had it under contract before we even purchased the building for 18 months, talking to the city, doing the feasibility studies, right? Just like any other large project that you would have, you've got your architect that you've worked with. You're probably vetting maybe 3 to 5 local GCs that you're going to get into meetings with, saying, hey, here's our general mock-up and design. what kind of treatment would you give to this? What do you think you can construct this for? At least getting soft cost and knowing what that is. Then going to the city and economic development corps that may be there, and seeing what kind of incentives you can pull out of the city, right? The city of Fort Worth has what's called a TIF, which is a tax increment financing. I don't know what the last F is for, but essentially it's tax money that they've drawn in from the taxpayers that they set aside to give to projects or development projects that would be happening within certain corridors, and they may have different sections for each of those. So the kind of case in point of that is we were able to go to the city, apply for some of those money, saying, hey, we've got a gap in our financing or our development here a little bit. And they, the city of Fort Worth kicked in $7.5 million to the project on the construction end of things, right? So that then for your mechanicals or whatever it is, we did a layer of PACE financing, which is, if no one's worked with PACE, it's property assessed clean energy. The way PACE basically works is if you're putting in, kind of like the highest and best or energy efficient mechanicals, lighting, any of that into your building, they will give you favorable, lower interest rate financing to do that. That actually transfers with the building. It's actually comes as a property tax assessment. It's just another federal program, comes as a property tax assessment that's attached to the building, and you pay it out over 20 years.
So to hit on that, that was a fantastic summary there. And that led me into another question that I think is very, very important, which is when you are assessing these projects, right? Can you walk us through how are you underwriting those, right? From a profitability standpoint, what are you looking at to assess profitability going into a project? Obviously, development is, Wild West. You never know what you're going to get into. There's
no, and I would like to say we sit down and pencil whip that ourselves, but no, I mean, for a project this size, and for anybody that's when you're asking equity partners to come in and put 10, $15 million, this is where maybe you come in and you have some sort of third party that is checking what your data is, right? So we commonly work alongside Nova Gradix, which is, if no one's ever worked with Novo before, they're a national firm that does data analytics, accounting. They usually are our accounting partners for the project as far as like mapping out the money and where it's going. These are all things that you're going to have for projects of this size, right? So we bring them in to help with that. But, for us, it's, it kind of starts on the underwriting end of it. Just like we do anything else. So we know Fort Worth is a large metropolitan area, and it can pretty much hold anything, right? But at the same time, we go in and go, okay, they're going to do, we looked at our general assessment just kind of starts with, hey, here's some major markets that we know investors would like to be in, right? Like, we've already got a pool of investors from what we've worked with before, and just in general, and say, hey, what markets would you like to be in? Well, anything in Texas right now, right? Big four for Texas. Anybody would love to be in either, Austin, San Antonio, Houston, or Dallas Fort Worth Metroplex. No one's going to bat an eye if you're saying, hey, I'm looking at developing this. They're always going to give it a serious look. So that going into it, right? So it's just one of those things. Okay, we search those areas. Are there any old buildings here? What can we find? Like, what is on the market there that we could potentially utilize or take advantage of? We found the building in Fort Worth, put it under contract, purchased it for right around $11 million, I think. So and it was a holdout building, right? So you're purchasing a useless building that's not cash flowing or anything, for $11 million. And we started our process there, but we knew going into it that these are markets that our investors are already looking at. And then when you come in a program and go, hey, it really becomes like, we know we're going to go turn whatever this building is into a hospitality product. So then we reach out to management companies that we have, whether it's Aimbridge or Remington, some of these larger kind of hotel or asset management companies, and saying, hey, do you have any market analytics on this, right? And they may have, luckily I have a hotelier partner that, and we already have a couple of hotels as well. So they're managing our hotels for us. So it's not too big of an ask for us to go, hey, can you do a quick market whip up on what are the holes? Like, what, as far as all the projects, because hospitality is even tiered as well, right? You know, there's mid-tier, exterior corridor, there's economy, there's luxury level, there's whatever it is. What is underserved in the Fort Worth area right now, right? You find what that is, and then you go pander to your, you know, 3 or 4 different flags saying, hey, we know that there is a need for a luxury or mid-scale full service hotel here. You go to Marriott, Hilton, you know, IHG, um, you know, Hyatt, and just say, hey, what, you know, which one of y'all would be willing to put a flag here, right? Like, where you at, and what would you give me? You know, you hustle every nickel out of every phase of it that you can, right? Because depending on, Marriott may go, hey, we don't have enough doors there. We want to be, you know, competing with Hilton in this area, so we want to come in. Or for this particular property, it is kind of an extension. It used to be an old Radisson. It shares a sky bridge. If anyone's ever been to downtown Fort Worth, with the downtown Hilton that's there, that was actually the Hilton that Kennedy stayed in the night before, you know, he was assassinated there in Fort Worth, just a few blocks away, right? So the building gets its historical relevance kind of as an offshoot from that. So, you know, Hilton as a brand, or actually Marriott goes, hey, we want to be, even though it's a complete separate thing, Marriott goes, we want to put up a flag right next to them. So Marriott comes in and gives us what's called key money, which is basically money from brand. I mean, you still have to pay your franchising fees and everything else, but then on the reverse, they end up giving you $1.5 million to then come in and build that there, and you're able to pull a little bit of money from the brand itself to kick in as part of the deal. So, and then you're constantly trying to negotiate those things to figure out what's there. So, it's one of those things from an analysis standpoint, and this is for what I do on the hotel end of things. I would say even previous to that, when we first started, you know, and if you're just starting out into this, and you may find yourself in a, you know, mid-major city or whatever it is, you may have just a 2-story old building down the road. That's what we started with, and we purchased it, redid the first floor as retail. There was really not a lot of restaurants in downtown Little Rock at that point in time. And then there's, you know, one of the buildings that I still own is the first building I purchased, has 3 restaurants in the bottom. Upstairs, you know, is undone. We, you know, that's a whole nother story why the the upstairs did serve as office and was an offshoot for one of the operators that we had here that was operating like a restaurant type lounge area that would do events in the top of it. Um, and they ended up getting evicted. There was a long series of just on. That's another whole operational and owning and property management type story that we could go through at a later time. But so we haven't redeveloped that and have looked at even doing some multifamily and stuff up there. But the building itself cash flows from the initial adaptive reuse and everything we did for it, with the 3 restaurants that are, you know, operating in the bottom of it currently. So, you know, it's one of those things where I haven't went back and necessarily developed that because, you know, it's one of these things, the time constraint that I have to put into this, whether I'm doing $100 million property or I'm doing a $2 million property, the process is pretty much the same. It's just you know, you're playing with higher, you know, you're still playing poker. You're just playing with bigger chips on this end of thing, and you're still, you know, so if you're going to be spending your time doing something, you might as well be gambling big, right? So, you know, it's just kind of the thought process to that. So all that to, I guess, kind of circle back, it starts with, you know, going into there and knowing your own market and saying, what can this be, right? Really, that's the hard part with adaptive reuse, is going, what isn't the city in need of? What can be here? And who is a developer or who is a third party that I would know that would want to come do something here, you know? And then looking at your pool of investors or anything else. And I would say the low hanging fruit right now, that most people that will be able to probably find in their backyard, is with office space dwindling. There has been a lot of developers that have been coming in. Say you've got a 20-story high rise, they're shrinking down all that office into the bottom stories, or maybe pushing them up to the top and then redeveloping several floors into apartments. Right? There's always a need for multifamily. We know as commercial real estate practitioners, it is the most steady, always kind of performing asset. And they've even done, for you talking about the industrial use of it, people have converted large industrial warehouses into, mixed retail and multifamily as well. So those opportunities are out there. It's kind of finding them, looking in your backyard and seeing what's there.
A question that we were or go ahead, Carolyn. Go ahead.
You started out with the data analytics, like how do you underwrite it? And there was a firm that you mentioned, Danny.
Oh, Nova Gradix.
NOVAGR.
Yeah, I'm terrible at spelling it.
That's okay. I'm sure I can.
And I will say Nova Gradix is great, because they know a lot about HTCs. And if you go to their main website and hit because we haven't even talked about that process as of yet, but and click, they have like a HTC tabs on there, and they will show you there's 37 of the 50 states right now that have additional incentives besides the 20% that the federal government gives you. There's 37 states that have additional incentives for adaptive reuse or historic projects currently, that you can, squeeze additional money. The part of the reason we're developing in Texas is between the state and the federal, we're able to basically clip a 45% coupon on our construction costs. And there's a bunch of different things that you can do with that, but it's, there's a bunch of different ways that we get money now for it. It's kind of complex how it fits into the capital stack and everything else. And that's really what Jordan handles. If you wanted to do just an aside, or maybe for one of your future, one of these is having Jordan in just to specifically talk through the capital stack and how you kind of work through the kind of 1, 2s, and 3s of that, with maybe even a mock-up capital stack, but that may be good for everybody to go through. He's the local savant for that, right? Or my savant for that. Like, he initially found that thing. He's just one of those guys that can look at the numbers, understand, and especially from government program. I wouldn't know anything, but he goes, hey, there's this government program. I think we can work it and stack it with this and do this. Some guys that are good at that are just good at that, right? And having someone on board, that's just an opportunity that I got afforded in my life. Having someone that knew how to go, we can put pace and we can do this, we can do this. And next thing you know, the construction costs for redoing these, it makes it more enticing for investors, because if it was up to the investors on where to put your money, it's always less expensive to build new and build exactly what you want. Adaptive reuse is difficult. You've got
I think those incentives are key. And what I'm hearing you say is it's going to be unique for each state, actually, because they have different incentives. And I've been looking on the green side. So it's a iterative process. I think that was a great question that you had, David, to lead off. And I think your suggestion, Danny, about bringing Jordan in would be on another session would be excellent, like a mock example.
Yeah, and you could, because there's not just, we deal in historics, which is one of the programs. There's other programs. There's a program called that's new market tax credits. They used to be able to stack them, but a couple of developers did that in the kind of mid-teen 2000s there, and got their hands slapped because they were the government's like, hey, you're double dipping us for tax things, and a few lawsuits ensued from there. And the firm that did it may have been out of Charlotte, Javen. I think that they may have been some of those some of them early projects that they did in downtown Charlotte, where they it was kind of the Wild West to begin with, when it was just a grab of these different programs as the federal government has them out there. But basically, the way new market tax credit works from the 10,000 look view is like, it's about job creation, essentially. So if you're bringing a product to bear, an asset to bear, especially if it's like a giant retail, and this may fit better with industrial than historics would be, because if you've got an old industrial warehouse that's in a classically depressed part of town, first it has to be in like a opportunity zone. If it's in an opportunity zone, are you bringing in and doing job creation there? Maybe some sort of a living along with it, and then job creation, and then they're able to, kind of, you build a but-for case is what they call it, saying, hey, we could build this, but for this gap in expense, and then they go, okay, we can fill that gap for you. So it's again another government incentive program that exists, because they know, like, no one with investment dollars is just gonna, we live in a capitalistic, society or economy, or however you want to look at it. You're going to take your dollar to utilize it to make the most out of it. You're not, unfortunately, there's very few like altruistic people that are actually just going to go develop something and have it as a loss leader. That doesn't happen all the time. And
Yeah,
typically,
that's the same with all the green stuff. Whether you
yeah,
believe we've got a carbon footprint or not, I mean, Texas doesn't want any of that money unless you show them how much money they can make out of that money.
that's right. I mean, we all know, like, we're in this business to make,
Yeah.
we're in this business
You
to make
got
money,
to do it.
yeah. I mean, that's I mean, you have to
But
know
there's a
that.
lot of incentives. I think this is a
Yeah.
great discussion.
So,
Yeah, and that's how these deals pencil, right? And that's the biggest question: is how do you how do you make money? How do you pencil these deals? And to your point, if you don't have the tax credits, I mean, good luck.
yeah, and that's what I'm saying. How it actually pencils is going to be. That's what I'm saying. You probably bring Jordan in for a secondary follow up to this later down the road to maybe do a penciling session on, like, hey, here's how I look at. Here's how you can potentially stack this. Here's how you build your sources and uses out of it. And because we did our initial modeling like that, but he is, while I can do it, he is more or less the savant at it.
Got to have a team.
Got to have a team.
Got to have a team. When you're working through these historic projects, right? Can you explain the role of historic preservation and how what that looks like in adaptive reuse? What are a lot of the common guidelines, restrictions, challenges, needs, requirements in order to abide by these historic guidelines?
So usually it falls under a lot. Most of it's heavily weighted on the exterior because that's what people see as the historic structure that's there. Um, so there's a set of guidelines. You can go to NPS. It's under, so all this is an offshoot under the National Park Service. So you can go to NPS, or you can just Google, National Park Service, historic renovation, whatever it is. And even if a place, like, if you're looking at buildings in your local area, there is just the historic registry, or I think it's the National Historic Registry, or the National Registry of Historic Places. I'm dyslexic and it all runs back and forth through my head, right? So you could look on there and you can qualify. Like, if you're looking at a building in a downtown corridor, so sometimes there's districts. So sometimes the whole district is a historic district, and then therefore every building within it can be a historic, qualified as a historic thing. Sometimes they're one-off buildings, and then it's also like it's an application process too. If you've identified a building that is over 50 years of age, is one of the main key things, and then has some sort, you can build some sort of a story for historic relevance, then they'll usually accept it and add it to the registry. Once it's on the registry, then you can, it's basically like a 3-part process to, like, utilizing the historic tax credits. But it starts with going down and going, hey, we're going to turn it into this. You submit an application saying, we've identified this building. It's on the, historic registry of places. And then the part 2 of that application is sending in like a, 50%, at least 50%, like, construction set that the architect has drawn up, saying, hey, we're turning this historic building A into this, right? And we're keeping this historic feature thing. And that's why it's key to have an architect that has done projects like that before, because they're going to know the material things that is going to have to be kept on any one building, because every building's a little bit different. Everyone's in a little bit different a shape. Sometimes the worst shape it's in is actually a little bit better because there's less to actually preserve at that point, which kind of, it may be difficult to say, but at the same time, if there's more of it there, they're going to look at it and go, we want to keep that. We want to keep that. We want to keep that. So it is very much in real time, where there's guidelines, that at the end of the day, there is a person, at NPS that is reviewing that and making that decision. So there's still a very human element to it. And some of those applications, can go back and forth as a bit of a negotiation. It's like, hey, I know you want to save this, but it's not feasible to move this project forward. So there can be a little bit of a negotiation back forward, because there is a human element to it. And at the end of the day, all of they're all preservationists themselves, right? They would rather, or at least in my mind, in the dealings that I've had, and I always try um, to either negotiate or set the conversations up in this way, is their job and why they're at and why they do what they do is to try to save these buildings in the first place. So it's always that where it's like, hey, help me help you. Like, this is what I need. This is what it's really going to take to save this building from a construction standpoint and a development standpoint. Now, how do we bridge these gaps and work this forward? Because it's a standard application process, but at the same time, you'll turn that in and they'll go, oh, you can't do that, but can't, or you're just, it's not in a coordination with what you want, and let's look at X, Y, and Z. So there is a back and forth there, right? So and just like anything else in life, having a firm, Sandvik Architects out of Cleveland, Ohio, is who we primarily use. We've also used Campo Architects, which is out of New Orleans, and has done a lot. And so, and then Sandvik has done a lot in Cincinnati, Cleveland, those major metropolitan areas, even up to Detroit. They did a really great project that is the Cadillac Book Building in downtown Detroit. You can look it up. Where they did it. So it is a hotel. It is high end living. It was a massive, 500,000 square foot plus building, that they come in and did a massive adaptive reuse project, or was the lead architect on doing that project. And then they've done their our architect for the 3 projects we have in service now. But they also have a track record of completing those things. So NPS knows that they know what they're talking about. And then they also, because when you're dealing with the government or any other bureaucracy, you may submit an application, but actually getting to the decision maker is a whole nother thing, right? So having an architect that knows who that end decision maker is and may have them in their Rolodex, and and will sparingly make those calls when they need to make those calls to say, hey, how can we work this out? It's key, and it's what you pay them for. So, just like you said, Jabin, it takes a team. Starting with the proper architect is kind of where you start or kick that process off, from the historic development end. Now, I will say, in general, things are going through. They're going to want to preserve, windows. And window treatments are huge, right? They don't, they want you to try to preserve the exterior look of the building and the windows, the masonry. All that is usually a fairly big or expensive cost. Typically, they don't want you doing anything with the roof or the roof line that can be seen from the street. It's not that you can't have new things on the roof or change it up, but they don't want it to be from street or eye level to be seen. And then they usually try to preserve the interior corridors as much as possible. That's why a lot of times, like, hospitality to hospitality, or even office to hospitality, or good grief, or even office to apartments or multifamily, is because usually an office building, the corridors, like, you take a level up and you step off the elevator, the corridor may be U-shaped or whatever it is to go to different offices. So it's really easy to program that back in, to just single living spaces or whatever it may be. So that's just kind of like the 3 kind of things, and things to assess, right? Is it 50 years old? They're going to look at the windows and the exterior much, and then what does that does the interior corridor as it sets, is it advantageous to what you're trying to build, right? So we know on the hospitality end of things, when we go look at buildings, I need to have at least, because depending on where it is in a downtown corridor, you may only have 2 sides of the building that has windows on it, right? That's no good for me. I need a minimum 3 sides of the building need to have windows, even if the back side is a parking deck, or even if it's windows facing a wall, which, no one likes to stay in that room, but we've all stayed in hotels with very unpleasant views, right? So it's just one of those things where we know immediately going in, like, if that's probably not going to lay out the way we need it to, and I'm able to mark it off list. If I've also been asked, well, it's like, well, how do you qualify this? Like, you do anything else. I go to a market and I walk it and start looking at what's there. A lot of times I get more from walking it, looking at building. I like the way this one looks and lays out. I like this location. Who owns it? Is it just an office? Is it for sale? Is it, what are they doing with it? Because you may be bringing an opportunity to somebody that they may be floundering. They may not know anything about any of this, right? We all know and have dealt with, surprisingly, owners and investors that are very hands off with their property, and or leaving it up to management companies or whatever that may not be outside of the box thinkers, and you're bringing them an opportunity that you would think that someone would have brought to them previously, but they haven't, right? Because even if you're at JLL or Colliers, one of these other places, you're doing the day-to-day man. Your job as a property manager. You're not looking to develop, right? So you're not, they're not wearing that development hat. Everyone gets in their focus in their day-to-day job. So I would say, where does a lot of this adaptive reuse start? Well, starts with thinking out, being outside of the little box a little bit, and then going in any one market and envisioning what could be there, and then trying to search and pinpoint your opportunities from there, right? Like what could some of these buildings be, right? So it's coming down and going, how can I rewrite what's here and preserve this as best as possible? And sometimes you can look at examples of other cities like Charlotte's done a lot of. I had when we first started this here, I actually had I can't even remember that guy's name, who was kind of like a local economist there that was part of their economic development corp. That was just like kind of the chicken or the egg situation. Do you start building the multifamily first, or do you start building the grocery stores? Do you start building the amenities first? On to which drives and brings people down. And there's really is no great answer, because just like I think every market's a little bit different, and it's what it provides for you to get that barrier of entry to start building things, and then getting the drivers in place. So he came here, did like a 1-day tour, just walking around downtown Little Rock. I mean, giving me different ideas on what things could be, right? So there's it starts some time to do. And I would say this, to do adaptive reuse does take a little bit of vision to do it. Not anybody can walk up to an old building and see an opportunity. It's kind of few and far between.
Danny, that was, I'm sorry I interrupted you, David.
No, go ahead. This is fantastic.
I just did a revised CCIM 104 class in Dallas, and they were really talking about what you're talking about is being able to envision for maybe a new investor in commercial real estate. They're diversifying out of stocks and bonds, and because commercial is now the new kind of in the middle type of asset, and to describe to them that opportunity out of the box in a way that makes financial sense, could close the deal, right? So you have to kind of put that, even though you don't have all those iterative pieces you were talking about, we need a whole nother session or two to talk about that. It's not in stone. You don't know you're going to get those, but if you could pitch that vision, that's a key story. It's a story, right?
Yeah.
To take and I want to say your message is awesome, because just because it hasn't been done and it's owned by somebody else and it's currently in office, don't let that put you out of the idea of where you're going. Build that vision if it makes financial sense, and don't be concerned about pitching it, because I think you can close when you have the numbers. You can close it, and they certainly are not being served by their current brokers that are just managing the property, and if they're hands off, maybe their return can be a whole lot better.
That's right. You don't know what you don't know, and making a general assumption that they, I would say that I've made a life and a career by being able just to ask the questions, and being willing to pick up the phone and then ask somebody like, hey, are you like what? And they may say, yeah, no, I've thought about that or whatever. But if I didn't ask, then I wouldn't know. Generally assuming that everybody knows what you know doesn't pan well for you, right? Like we're always, as commercial real estate practitioners, we're always looking for a way to express value to individuals. That's how we make money. This is a value. This is something that I know. Have you thought about this? And, a lot of them haven't. And they'll say, well, sit down and explain to me. And you'll be surprised. You go in a lot of areas that like, I don't get it at all, right? Some of these people are not, you got a group of 20 doctors that are bound together buying things. And I know everybody thinks doctors are the smartest people in the world. A lot of them don't know numbers all that well, right?
They don't have
understand
any business
investments.
classes. There's no business classes in medical school. Trust me, my dad's a doctor. He knows.
Yeah, well, and everybody attaches a DR to their name or a higher end thing. There are C students in those classes as well. Not all of them are Doogie Howser, right? So or House. So like not all of them are the most brilliant people on earth. And like you said, Jabin, it takes a team to build actual wealth. So
this is fantastic, and I appreciate your time here. We are at the top of the hour, so I feel like that was a great summary to kind of start bringing us home. Does anyone have questions? One thing I was going to ask you, but you pretty much answered it yourself, which was, as brokers, right? We're always looking for opportunities. What do we need to be thinking about, looking for when we're prospecting and identifying these opportunities for you? Pretty much, I think you answered it fantastically over the course of this hour, and have given us a lot of information to digest, and I think become better brokers and be able to have more intelligent conversations with these owners. I would like to open it up to anyone if you have any questions for Danny before we bring it home. The floor is your guys. Don't speak at once.
Danny, whenever you get these developments underway and you come to the point where you're trying to fill them, you're trying to lease them out. What groups of people, like if you want to do a hotel, who are you going to try to get these buildings, leased out? Is that what you're doing? Is you're getting to a point and then you're leasing them out to other businesses?
No. Like, we're specifically doing hospitality. So I already have brand, and design, and we're building it specifically to be a thing, right? Like, so, the conversion here in Little Rock was to build it specifically to an AC Marriott. The conversion of the old Shell Oil headquarters in St. Louis, we did 220 rooms total. It is a home to and true by Hilton. The project under construction in Fort Worth will be a La Meridian by Marriott. And right now we've got an autograph that we're slated to do. We own the building that's on the Riverwalk in downtown San Antonio. We're trying to get our construction financing in place. Has been the big, since the spike in interest rates, the first person we had slated for, and I mean, as a developer, I'll be candid, the first person we had slated to do it we're getting 30 days out from closing this loan, or 45 days out. And they're like, well, turns out we can't do this now. Right. Like, they just decided to basically walk on us right there in January, as we were hoping to potentially close in February. So that's, we've had to pivot, and, we're working through that. I mean, that it's almost the same thing we saw during COVID. Is our construction lender, which is like a private equity firm, tried to back out on us the last minute when we're trying to push this forward, because they say, we don't know what the market's going to do. So even if they've signed an agreement saying that they're going to fund, that doesn't mean that bank's not going to try to back out on you last minute. So being development's difficult, at most of the time. So, but that being said, like, it's a good example of this right now. And we can, if any of y'all want to follow up on that, if any of y'all have multifamily investors that may want to look at a project like this, is we had originally purchased a building in Amarillo, that we still have. We wanted to do a hotel there. We're looking at maybe doing hotel, maybe multifamily mix at this point, just because financing is better for multifamily projects right now than it is for hospitality products. So I've got a large historic building in downtown Amarillo right now that we're still trying to program and figure out which way we're going to run with the ball. May end up doing complete multifamily, because multifamily in downtown Amarillo right now is on serve. They only have 85 units in downtown Amarillo currently there, and they stay, almost upwards of 90% occupied, and they're, a little bit higher end. And then our particular property is right next to their convention center and all the other amenities that you'd want in the town. We've been working alongside the city for the past 2 years, and they just want us to do a project. They don't necessarily care whether it's multifamily, indoor, hospitality. They're just wanting to get those tax dollars and continue to try to revive downtown Amarillo, as a lot of cities are, like, that are mid-major cities, going, how do we revive and get people to our downtown, so it's not such a barren wasteland, and setting some of those things up. So if anyone wants to give me a call, even after that's kind of the selfish plug there, is I do have a project that we're still looking for potential equity partners, or maybe even end users for it. Because hospitality is more the tranche that what we do have experience with doing multifamily, and have some other multifamily developers that I could bring into the deal, but we're kind of exploring those options at this point.
Beautiful. Does anyone else have questions?
Yeah, Danny. Hey, this is Derek in Tampa, Florida.
Yeah.
Hey, I have a quick question for you. About, I think, thank you is very, it's a great overview. And I think I'd like to know also more if you have maybe a list of resources for any kind of incentive programs, like you mentioned a few of them, either federal, state, or local, because, we're working with a lot of national brands or national builders, developers in the area. And sometimes us as a broker being able to bring these deals for these adaptive reuse projects and have a handle on what the incentive programs are.
Yeah.
Local, state, federal, or state that they can benefit from. Maybe we work with a lot of developers. Maybe they're upper from the Northwest. They're coming into this market because everyone wants to be in this market, and they're not familiar with some of these programs. So, do you have maybe a list of resources that we might be able to?
I'd actually when we did, we're doing these regional meetings now, and I'd actually put together a slide deck just on adaptive reuse in general that we did in like the last regional meetings that we kind of circulated around. But even on that, I did like a short list. But yeah, let me, Jabin, I'll email you or come in this in the email thread leading into this. I'll throw together bullet points of just some of the national ones and then some of the ones to ask about locally, because there's also, on a local level, you may have something that is unique and specific that your city or town or county has instituted. State, county, city are 3 levels as well as national, that there may be some incentive program that exists that's unique to that area. So I would say, start reach out if there is like local economic development corps and stuff like that, and it may not even be called that. They're, different cities and municipalities may have different functions. Check with people there and see what may be available as well that may be unique to your area. And then I can give you a list of a handful of ones that are kind of commonly seen around the nation.
Fair enough. Thank you.
Yeah.
We'll take that, Danny, and for everyone to just see, we'll post it in the workplace committee group for you guys to have, and we'll share that with you. So
what's the name of your workplace committee group?
It's the Industrial eXp Industrial Committee, and I will send you the link to it. So we'll share everything there. That way you guys have access to it. And yeah,
awesome.
This was great. This was fantastic.
So yeah, cheers everybody. Thanks for having me on. I guess another plug is as well is Jordan and I, when we do kind of similar to this, is we do an adaptive reuse, not even adaptive reuse, more or less a historic tax credit talk through that we host once a month. It's actually this Thursday, and I think we moved it more to this format because we've been doing it in World for a long time as part of eXp University. Then that kind of went away, and we've still been doing it. So I think we're just looking to move it over to a forum like this where we would talk about like, hey, this is how you would apply, this is how you would monetize them, and just kind of the 1, 2s, and 3s of historic tax credits, and kind of talk through that.
Absolutely.
Yeah, that's on the calendar for everybody that's here.
Perfect.
Awesome. Hey, Danny, I want to thank you for your time. It was an amazing fire hose of information. You're an amazing guest to have. I would love to have the opportunity to have you back on sometime in the future. Maybe talk about more of the same or something else, whatever. But
fair enough.
It was a great time. We really appreciate you and all your information. It was very valuable for us and everybody.
All right. Cheers. I'm glad I could be of service. And anything, I mean, we're part of this digital eXp family together, right? I'm just a phone call or workplace chat away. So shoot me a message. If anybody wants to reach out to me, talk shop, feel free.
Definitely. I will definitely be following up with you. I'm in Vegas. I only do industrial and big deals like that, like you're talking about. So I'd love to collaborate any way we can.
Yep. Cheers. Excellent.
Sweet. Close us out, Jabin.
See you guys. Have a great week.
Have a good one, guys. Thanks, everybody.
Thank you, Jabin.
Great. Thanks.
Thank you.
Jabin.